Hi everyone. I want to go over some examples and some items that may be helpful to you for Chapter 1. I first want to start with this account classification document that I will upload for you, and this is for your reference, and it has all of the answers typed into it. But I want to point out a couple of things. If you don't know how to determine an account, what type of account it is, and what financial statement it goes on, you will have trouble for the rest of the semester. So it's worth your time to invest a little bit right now and just learn this stuff. Every single account on our chart of accounts, and if you have read the chapter, you understand what a chart of accounts is, belongs somewhere. It belongs on a financial statement, and there are three main financial statements: an income statement, a statement of stockholders' equity, and a balance sheet. And then each account has a type. The type of account determines which financial statement it goes on. So I want to go through these with you. Accounts payable is a liability type of account. All liabilities go on the balance sheet. So let's talk about what types of accounts go on which financial statements. An income statement always has just revenues and expenses. It's fairly simple. A statement of stockholders' equity has a couple of different types of accounts in it, and we'll talk about those as we go through this. Balance sheet, if you remember your accounting equation, which is extremely important, that accounting equation is assets equal liabilities plus stockholders' equity. And you should probably just memorize that. It's fairly easy to memorize. And that accounting equation can be rearranged to solve for things too. And you'll get into that a little bit later in the chapter, and maybe in chapter 2 as well. So back to this, accounts payable. The type of account is a liability account. Liability accounts belong on the balance sheet. Accounts receivable. The type of account is an asset account. Asset accounts go on the balance sheet. Buildings is an asset account. Asset accounts go on the balance sheet. Let me just skip down and do a couple of different ones. I don't want to go through all of these with you. This is simply for you to use as a reference and maybe use it to drill, cover up the right-hand side and just test yourself. Common stock is one of those different ones. It's a stockholders' equity type of account, but it belongs on the balance sheet and the statement of stockholders' equity. Dividends is its own type of account. It's very simple. It's a dividend account. It only goes in one place. It goes on the statement of stockholders' equity. Let's move down to retained earnings. It's a stockholders' equity type of account, but it goes in two places. It goes on the balance sheet and it goes on the statement of stockholders' equity. And as we work through these examples, you'll see why that happens. Expenses go on the income statement, revenues go on the income statement. And so there's a list here, and I'll upload this for you so that you can play with it. Now let's do some examples. Brief exercise 1-5. And these are actually directly out of your textbook. So if you look at the end of the chapters in your textbook, whether you have a paper textbook or you have an online textbook, an ebook, you'll see at the end of each chapter, there's brief exercises, there's exercises, and there's problems. This is from that area. So brief exercise 1-5. We want to classify each of these types of accounts. What financial statement is it on, and what type of account is it? So it tells you right here that the balance sheet includes assets, liabilities, and stockholders' equity. The income statement is revenue and expense, and the statement of stockholders' equity is dividend. So rent expense, number 1, rent expense. What type of account is it? Well, expenses are fairly easy because they usually say expense. So this is an expense. Expenses are on the income statement. Okay. Number 2, Interest revenue. Revenues, again, are fairly easy because they say revenue. But as we get into some later accounts, sometimes they'll say revenue and they're not really revenue, so be careful there. So the type of account here is revenue, and it helps if I spell it right. Revenues are on the income statement. It's not asking you to identify what financial statement they're on because they've told you that revenues are on the income statement. 3, dividends. The type of account, well, it's a dividend. It's nothing else. Dividends only go on the statement of stockholders' equity. And I'm going to abbreviate here. I don't want to type all that out. 4, land. Land is an asset, and assets go on the balance sheet. And they go on the balance sheet if you remember your accounting equation, and you'll want to know that. Assets equal liabilities plus stockholders' equity. That's what goes on the balance sheet, is assets, liabilities, and stockholders' equity. 5, accounts payable is a liability, and it goes on the balance sheet. Remember, assets, liabilities, and stockholders' equity. Okay, let's move on to BE 1-6. Let's do some more. We're going to classify these. So number 1, utilities payable. Payable, anything that says payable is a liability. 2, cash. Cash is definitely an asset. 3, salaries expense. Well, it's that expense again. Expense. 4, common stock. Ooh, where does common stock go? Common stock is a stockholders' equity type of count. Stockholders' equity. Okay. 5, service revenue. That's a revenue type of account. So do you see what we have to do here? You need to be able to classify them. Use that drill sheet that I uploaded for you and practice. Okay, let's move on to P1-3B. So that means problem 1-3 set. And I have it posted down here, and you can also look at it in your textbook. So we have this company called Gator Investments, and it helps to pay attention to what the company does because it helps you to determine these types of accounts better. So they provide financial services. At the end of the year on December 31st, 2021, the company reports the following amounts. And there's a bunch of amounts listed with accounts. And then some additional information. We're asked to prepare the 3 main income or financial statements: the income statement, the statement of stockholders' equity, and the balance sheet. In order to do that, we would have to know what types of accounts go on each of these statements. And let's talk about these statements briefly. Income statement is for a period of time. For the year ended, for the year. I guess there's some typos here. Let's see if I can just fix that. For year ended December 31st, 2020. So everything that happened during the year from January 1st to December 31st gets aggregated and put on the income statement. The statement of stockholders' equity, the same period as the year as for the income statement. And I obviously made the same mistake over here. So the statement of stockholders' equity is for the year ended December 31st, 2020. Everything that happened to these 2 accounts during that year. The balance sheet is a bit different. It's at a point in time, not for a period of time. So what are the balances in my assets, my liabilities, and my stockholders' equity account at December 31st, 2020? Or actually, I think all these are supposed to be 2021. And I'll fix this in your document. Okay. So let's start. what goes in the income statement? Revenues and expenses go in the income statement, right? Let's put those in. We have one revenue type of account. Down here, if we look through the list, we have one revenue. It's called service revenue. And we're going to put that over here on the right-hand side. 127,600. Okay? Oops. Sorry. 127,600. And down here, we want to list our expenses. So we've got advertising expense, we've got salaries expense, we have interest expense, and we have utilities expense. Let's start with advertising expense, and I'm going to abbreviate here. And salaries expense. And utilities expense. And interest expense. Okay? And we're going to put these amounts in this column. So advertising expense is $33,500. Salaries expense is $65,100. Utilities expense is $15,500. Oops. Yes, interest expense, I got those out of order, which doesn't help, is $3,500. And then our total expenses would go over here. So we'll just auto sum these to get our total expenses over here. Our net income is the difference between our revenues and our expenses. And it's really easy to do formulas in Excel. You just point and click. So start with a plus and point to this, minus this, and hit enter. And so our net income is $10,000. So we've completed our income statement. And these accounts can only be used once. So once you use them once, you're not going to use them again. And the other thing I want to point out to you is preparing financial statements, there's a definite order to preparing them. You must start with the income statement, do the statement of stockholders' equity next, and do the balance sheet last. Let me see if I can get everything on this screen. Okay, sorry, I had to pause for a second and get everything on the screen. All right, so we prepared our income statement. Next, we'll do our statement of stockholders' equity. This will get pretty complex by the end of the semester. We'll have several accounts in here. Right now we have two. We have the common stock account and the retained earnings account. The way you read this statement is you do it in columns. So we will look at common stock first. First, we start with our beginning balance. What did we have at the beginning of the year for December 31st, 2021? It tells us down here. In addition, the company had common stock of 100,000 at the beginning of the year. So we'll put that in. Okay? 100,000. What happened to common stock during the year? We issued an additional 11,000 during the year. Okay, so we issued stock. We issued $11,000 worth of stock. Oops, not 10,000, 11,000. That's all we did to common stock during the year. So our ending balance at the end of the year is $111,000. Now we're going to look at retained earnings as an account. What was our beginning balance in retained earnings? Well, down here it tells us the company had beginning retained earnings of $30,300. All right. So what happened to retained earnings? Well, here's where we start using prior information. All of our net income that we earn each year gets moved into retained earnings at the end of the year. So we're going to add net income over here, and it's going to come from our income statement, $10,000. So I'm going to just link those. I'm going to say plus, and I'm going to click on that $10,000. And it's going to link it over here. Oops, I actually linked it in the wrong place. I want to link it on the row where I put add net income. Okay. What else happens to retained earnings? Well, the shareholders might get paid dividends. That comes out of retained earnings. So we say less dividends. Did we have dividends? Yes, we did. It says they paid dividends of $5,200. We'll just put that in as a minus, 5,200. So it shows it coming out. We don't normally do this when we make journal entries and do stuff to accounts. We can do it on the statement of stockholders' equity, though, to show that it comes out. I'm going to drag my formula across because I want to add this column up here. I want this total, and you can actually see the total at the bottom of the screen. You can't on mine because I don't have it where you can see it. But the total of this column is $35,100. Beginning balance in retained earnings of $30,300 plus $10,000 in net income minus $5,200 in dividends is $35,100. And I did this so I could just add the column. If you put this in as a positive, your formula would have to subtract it. This last column is simply a total of everything that happened. So we're just going to add this and add this. So the beginning balance total for stockholders' equity is that amount. I will simply add each row across. That's all that last column is. And then I'm going to total this up and down again. So I'm going to sum this column, and I'm going to come up with 146,100. So that's the total here, 146,100. I can cross-check it by looking at the total across. If I add those two together, I should come up with 146,100. This is what we call cross-footing in accounting. And that way we know we're correct. It adds up both ways. So first, prepare the income statement. Next, prepare the statement of stockholders' equity. And then we'll prepare our balance sheet. First, we'll add our assets. Let's go down our list. Assets, buildings, cash, and equipment. Those are the three assets here. Things are put in a certain order on a balance sheet, and they're put in an order of liquidity. Cash being the most liquid thing we have. So my cash total is $5,500. The next liquid thing would be equipment, because it's probably easier to liquidate equipment than buildings. So equipment, $27,000. And the third one is buildings. And that would be $150,000. My total assets, so I just want to add those up, $182,500. Liabilities. Accounts payable is always the first liability. If there are accounts payable, it gets listed first. So accounts payable is $6,400. Oops, not $64,000. Are there other liabilities? So accounts payable, there's notes payable. So notes payable is $30,000. And then I'll want to add those up. That totals $36,400. And here's the area where you get information from the statement of stockholders' equity. Common stock and retained earnings. My common stock total is $111,000. My retained earnings total is $35,100. My total, and I'll just add these up over here, is $146,100, and that adds up because that's the total I have on the statement of stockholders' equity. It's critically important that you get this retained earnings ending number from your statement of stockholders' equity, not from the problem, because things happen to stockholders' equity. Okay, now I want to do total liabilities and stockholders' equity. Here's where I want to add my total liabilities and I want to add my total stockholders' equity. That's $182,500. Remember, this is my accounting equation. Assets equal liabilities plus stockholders' equity. So my assets, $182,500, equals my liabilities plus my stockholders' equity of $182,500. So, and you'll notice when I set these up, I only put a dollar sign at the top of each column. That's the way we actually work in accounting. So you could put it at the total, and I didn't actually add it here, but you could put the dollar sign at the bottom and at the top. You put the dollar sign on the total and at the top of the column. You never put a dollar sign on every single thing. All right, let's move on to the next tab, which is exercise 1-4. So Eagle Corporation operates MRI clinics throughout the Northeast. At the end of the current period, they report the following amounts: assets of $50,000, liabilities of $27,000, dividends of $3,000, revenues, and expenses. We're asked to calculate net income. Well, to calculate net income, if you remember what we did over here, net income is revenues minus expenses. So revenues are $14,000. Okay? Minus, and I'm just going to type this in here, expenses. So expenses are $9,000. And that equals net income. So 14,000 minus 9,000 equals 5,000 net income. So our net income is $5,000. Calculate stockholders' equity at the end of the period. Oh, well, let's look back. What does this look like? Total stockholders' equity at the end of the period. Well, we need to know our common stock total, and we need to know our retained earnings total. Retained earnings is $30,000, or the beginning amount, plus net income minus dividends. You'll want to remember that. I'll probably, that'll come up a lot. How do you calculate ending retained earnings? So let's go back over here. So we could do all of that, but we're missing some information, right? Well, there's another way to do that. The accounting equation. The accounting equation is assets equal liabilities plus stockholders' equity. Okay, so how much are our assets? Our assets are $50,000. How much are our liabilities? $27,000. We can't really calculate all of these individual items. We don't know. They didn't tell us about common stock. They didn't tell us about beginning retained earnings. So we can't do it that way. What we need to do is solve for X. So what is X? If 50,000 equals 27,000 plus X, then how do we solve for X? Well, think about it this way. If I take my assets and I subtract my liabilities, I should get my stockholders' equity, right? So assets minus liabilities equals stockholders' equity. You can rearrange this equation. So I'll just say 50,000 minus 27,000 gives me 23,000 stockholders' equity. You can solve this just like any equation by rearranging the terms. Okay, I hope this helps, and I hope that it makes sense. Please let me know. I will post this spreadsheet blank for you to work on, and you can follow through and watch my video. Thanks.